MercadoLibre. Thank God I own MercadoLibre. It reported yet another excellent quarter. Stock is up close to 13% after hours, which means one share will cost you $1,814 at the time of making this video. Year to date, before the report, stock was only up 2.2% year to date, 32% year over year. Over the last couple of years, actually, let's do the last 10 years or so. I mean, this is a beauty, right? Revenue steadily grows, free cash flow steadily grows as well, with some lumpiness in some periods here. Of course, there was the pandemic, but overall, free cash flow has grown. Return on equity, 41%. Return on invested capital, 19.86% in the last 12 months. Net income continues to grow. Gross profit has exploded throughout the last couple of years, $8.82 billion in the last 12 months. I mean, excellent business. That's why it's in my top 5 in the portfolio. Now, MercadoLibre is another example of, it's not cheap, so I will not touch it. MercadoLibre, let's face it, from a forward PE standpoint, EV to EBITDA standpoint, I mean, 5-year mean here for forward PE is 97.2 times. So definitely not the cheapest out there. And yet, great business, great stock to own. Same with EV to EBITDA. So you always have to look at, let's say, both sides of the stories. Yes, you can look at valuation metrics to then determine whether or not a stock might be expensive or cheap, but do that usually after you studied the business. Because overall, this is a tremendous business, and I'm sure that a lot of people did not buy it because of a high PE or a high EV to EBITDA, price to sales, stuff like that. Right now also, if we look at price earnings to growth, 1.63, not the cheapest that we've seen in the last couple of days, but definitely not expensive, especially not for this quality business. And so before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We've already covered Amazon, good quarter, weekish guidance. If you missed that video, it's going to be in the top right corner. Same with Intel, horrible quarter. The next one will be about a block. I've seen some good numbers already, plus a $3 billion buyback program. Again, that's great, should tackle dilution. That will be in the next video. In this one, it's MercadoLibre, so subscribe, hit all the buttons, notification bell on so you don't miss anything. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I want to start with what has happened in the last 10 years for MercadoLibre. Revenue has grown by 35 times over the last 10 years. That's 43% 10-year CAGR. That's incredible. Of course, I wish I would have bought MercadoLibre way earlier, but I think my timing was quite good as well, right around that time right here. And so let's start with a couple of comments on the advertising business and on Mercado Pago in Mexico. So let's first start advertising business that continues to scale with revenue equivalent to 2% of GMV. That's up 40 basis points year over year and growing 51% year over year in Q2. The growing user base and frequency of our marketplace strengthens our ads business as it enables advertisers to target larger audiences on an increasingly granular basis with our first-party data. The core on-platform business continues to see strong momentum as a result of continuous improvements in our product, display, and brand ads formats. We're also seeing encouraging early signs in video ads with monthly active users of Mercado Play, our free streaming platform for third-party content, growing above 20% month-on-month through Q2, less than 12 months after its launch as a startup within the company. That's pretty good to know. In early July, they started the development of their off-platform business with their first external partnership, which serves programmatic video ads within the new ad-supported version of Disney+. This is the beginning of a very exciting journey for Mercado Ads, with more external display and video partnerships to come. I mean, it's still very early in my opinion for MercadoLibre as a company, despite its size already today. As for Mercado Pago in Mexico, they see huge opportunities there. In June, they announced their intention to apply for a banking license, which will enable them to scale the business to achieve their ambition of being the #1 digital bank in a country. Their ecosystem will be central to this strategy, and it has already proven to be a major contributor to Mercado Pago's early progress in Mexico as the largest fintech in terms of monthly active users, with solid NPS and profitable credit portfolio that exceeded $1.5 billion in Q2. Credit performed well across the region in Q2, with portfolio growth picking up again to 51% year over year, taking the book to $4.9 billion. The credit card continues to be the main contributor to continue on the back of 1.6 million new cards issued in Brazil and Mexico and upselling existing users to larger, more competitive credit lines in Brazil. So the momentum here continues, and that's always great to know because you don't usually get all of that information. And so for the quarter, revenue grew 42% year over year with 14 percentage points of growth due to shipping reporting updates explained in the Q1 shareholder letter. Brazil revenue grew at 51% year over year, and Mexico's growth reached 66% year over year. Argentina's revenue grew by 1% despite the devaluation. Income from operations, that's up 9% year over year, and net income grew 103% year over year. The net margin of 10.5% is the highest since Q1 2017. So, continuing here, commerce monetization improved year over year with higher ads penetration and lower Argentina mix. So the commerce net revenue per quarter increased 131%, and commerce take rate went from 18.4% to now 23.5%. That's also up from 22% in Q1. But they got a big bump here. 3.9 percentage points of the overall gain of the 4.1 was due to the increase in shipping revenues, where MercadoLibre is considered principal, with revenues booked on a gross basis as explained in the Q1 shareholder letter. There were some reporting changes that they announced back then. I suggest you go watch the other video. As for Mercado Pago, so the fintech side of things, take rate pressure primarily due to Argentina, plus the move up market strategy in Brazil, which is why you're seeing, still quite good. Take rate Q2 2023, 3.52%. We're now at 4.54%, so that's even up above the Q1 quarter, which was at 4.51%. As for gross profit margin, higher gross margin on a comparable basis despite pressure from Argentina. So Q2 2023, that was 51.1%. Q2 2024 comparable one is 51.5%, but if you go for the reported number, that's 46.6%, down 450 basis points. Overall, still very, very respectable. If you exclude Argentina, these are the numbers here below. Moving to income from operation, margin pressure due to lower interest income, primarily Argentina yet again, higher provisions due to the credit card books growth, and shipping reporting updates. Here, again, same thing as we've seen before. So we go from 18.7% Q2 2023, take a hit of 440 basis points for the reported number here of 14.3%, or if we go and look at the comparable one, that sits at 15.1%, 3.5% hit for bad debt, and 2.4% hit for Mercado Pago interest income and expense reclassification. As for net income margin, that's increasing year over year, supported by EBIT growth and reduction of FX losses related to Argentina. So we go from 7.3% to the reported number for this quarter, 10.5%, or 11.8% for the comparable, which is up 410 basis points for the same quarter last year. And so overall, GMV increased 20% year over year, or 83% on FX neutral basis. Items sold increased 29% year over year. Total TPV increased 36%, or 86% on FX neutral basis. Credit portfolio, like we've seen before, up 51% year over year. Net revenue and financial income up 42% year over year, or 113% on an FX neutral basis. Income from operations, $726 million with a 14.3% margin, as we've seen. Net income, 10.5% margin. Adjusted free cash flow up 368% year over year. When you look at those numbers, you might think, well, we're looking here for an up-and-coming company, right? Company that's worth maybe $5 billion, $10 billion, because it's growing quite fast. But no, this is a company that is worth closer to $90, $100 billion by now. And these are the numbers that we're getting. These are the year-over-year increases that we're seeing as well. This is incredible. And so overall, for the quarter, beat across the board. Small misses, gross margin. We've seen the reason why. So a small miss for gross margin, 148 basis points. Operating margin missing by 6 basis points. All the rest, a nice beat. And so right now, the stock will be back to a previous high here in January of 2024. We got rejected there, and then we went all the way back down to that uptrend line, so higher lows that we've been making since June of 2022. Of course, now we're going to try and go even higher above that $1,800. Yes, RSI is going to be quite close to being overbought. The 200-day moving average sits at $1,547, the 50-day one at $1,643, and the 20-day one at $1,658. Overall, I mean, nothing to say, right? Can't complain. I'm saying this each and every quarter, and each and every quarter I become more and more bullish on this company, which is why it's one of the biggest positions in my portfolio. I don't think I will ever sell any shares of MercadoLibre unless something drastically changes, which I highly doubt it will. So it's one of those companies where each and every quarter we're like, okay, this is great, this is great, this is great. Nothing to add. Moving on. Beautiful. If only every stock could be like MercadoLibre, right? So that's about it for this video. If you enjoy this type of videos, leave the thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.